Good afternoon, guys. Welcome to Crypto Cube Analysis. My name is Crypto Cube. I want to use this video to clarify on a question I received from one of the viewers who commented on the very last video I uploaded on supply and demand. So he quite didn't understand something I said or did, so he put the question out for me to clarify. So the question is from Emeka Chiudo. So he said, you were giving me cruise. Then I get the same problems again, like with other tutors. Actually, I don't understand what you mean by I'm giving you cruise. So I don't actually understand that. I don't get it. Then you said you get the same problem with me, like with other tutors. I don't quite understand the problem you have now with whatever explanation I've given, but it's okay. But again, I'm not like other tutors. Some other tutors, they want to sell a course, so they don't want you to really understand deeply whatever they are teaching you. So I am trying to get everyone to understand deep down the backbone of what moves this market or how supply and demand works. And I am using my own analogy upon how I trade supply and demand. I'll be trading it and it works for me. So I'm not like other tutors. Other tutors, they sell a course. So whatever they do freely on YouTube is to jail you towards buying a course. So I'm not like them. And I don't get that cruise pass anyways. So you said you're filtering, okay. So filtering trades now. No more than 5 candles at the base. Bet the zones you drill for drop base rally and rally base drop at 38.18 minutes as wiki base and more than 5 candles, yet it worked. It worked perfectly. Price stopped to move, created range, extended the range by its wicks, then reverse. Tell me, sir, is it that range extension is not means, or is it that range extension do not mean nothing to supply and demand? What I mean by range extension is price odds on the last drop candle, then produces fake house upon fake house candle using wicks. These wicks breaks below the lows of the previous basic candles but closes within it. Then another candle forms a first breakout from the last first breakout, and so on till price reverses to the upside. Let me take this one by one. I have actually replied. As you can see, my reply is available on YouTube. So I will first reply by listening to what happened exactly, or what I did say at 38.18. But I get the fact that he said no more than 5 candles. I actually said 6. It wants to, you can actually use more, it depends on you. I gave the analogy why you shouldn't use more candles on the base. That was where I used the analogy of a finish station. I think I didn't do it on this very video, but on the first video, I think that was where I gave the analogy. So if you do not watch that first video, you might have a little trouble understanding this one. So I will suggest that you watch that first one as well. I gave the analogy of a finish station, and I use it to explain the 5 basic candles or 6 basic candles compared to when you have 10, 15, 20 basic candles. So you should watch that video. But then I will try and explain again on this particular video based on what happened at 38.18. So that's number 1, the basic candle. Then you said wicks. I actually don't have a problem with wicks. Okay, anyway, let me first listen to what happened on 38.18. I have put it at 38.05 so that I can listen to what led to me saying whatever I said at that point. So let's all listen again. And it gave a serious rally. The close of this candle is very strong. That is a strong move away. Now look at this area again. Is this a strong move away from this area? Yes, it is a strong move away because we had increasing candle sizes. So this also could have been an area here. So if you choose to drop, if you use the last red candle, then you could have drawn the zone like this. When price came there, it gave a reaction 2 times, but it didn't quite give much reaction. And as you can see, my indicator didn't even give any demand zone there. And looking at all this price action at this point, you can see that the price action is a lot. So there are a lot of accumulation that has taken place before the rally. So it doesn't qualify it as a good zone. I explained the accumulation thing in the last video. So as you can see from my little explanation on this particular video, probably all that particular time frame from the 38.18 to this very point, probably you do not quite understand. I said this zone is not quite a good zone. That was what I said in the last statement before I pause the video, and I said that is because of this there is a lot of basic candles here. Let me go to the chart and there we take it properly from there. So here is the particular area of the chart. This is the particular area of the chart. I said if we look at this area, it doesn't qualify as a good zone to me, and that is because of a lot of accumulation that has happened on this particular region here. When you take your rule and you roll from this point, this is a basin area. Yes, here the first time we have a reaction to the upside. It did work. Yes, it's not every zone that I will take. I want to see what I want to see, and if this is not one of the things I want to see, then I'm not taking the trade. Either it works or it doesn't work. I'm not going to take the trade. And then when we have a return to it the second time, it broke down, and this didn't give enough risk reward. But then if you want to take this trade at this particular highs, then on this retest you'll be fine. But I'm not sure it's even giving up to 3R. That is 3-to-1 risk reward to risk ratio. But then I didn't even see this point that time when I was making the video. I was qualifying this whole move. From this particular point to this high as a strong move. And that if you use this particular last red candle as your zone, or up to the lows as your zone, then this was what I saw. I didn't even look at this at that particular time that you can also draw like this. But if you choose to draw like this, it is solely dependent on you. But then I wouldn't take this trade personally because of this lots of basic candles. This has shown lots of accumulation that has happened in the market. This is a lot of base, and if I go on an higher time frame, let me go on an higher time frame on this particular area here and see what happens. Okay, and looking at this particular area on the daily time frame, there is no zone here at all. We have a base, yes. We have an inside bar. Do we have an inside bar? Is this high? This is what of this low? Is this low? Lower than this low? This low is 5109 and this low is 50. Okay, this is an inside bar, yes. So you can have a zone at this point, but then it didn't work on the second retest, and on this retest, which is valid on the should I even say valid on the 4 hour, or which aired on the 4 hour for this reaction. But looking on the daily, there is nothing here to tell me that there is a demand at that point. So I won't take it as a good zone at all when I look on the daily. If I look on the 12 hours, I might have another thing. Even looking on the 12 hour, there is weakness in the market. The market is showing weakness, and just a single candle breakout, which is of good volume, that shows demand. But will I be taking this one even on the 4 hours? No, I will definitely not take this trade on the 4 hours, because I want to take only high probability setups. This to you may be a good setup on the 4 hour. This particular trade here may be a good setup to you on the 4 hour, but to me it is not a good setup, and so because of that I would not take it. So it is all a matter of personal preference. Is this what you prefer or what you like? If you like, you can take as many basic candles as possible. And like I said, I just don't look at rally base rally. If you look at this zone, obviously it is a rally, then a base. There is no exact drop here, because all we got was just a sideways movement all at this point. There is no true drop like we have from this point to this lows. There is no true drop from this point to this low, because the low of this particular candle is here. So it is a rally based rally, and I don't normally trade rally based rally personally. Sometimes I take it, sometimes I do not. So when I see something as huge as this, other traders may take it, fine. And it used to work, it worked, fine. But that is them. Me now, I'm talking about myself and what I will personally do. So I want to see a setup that looks clean, simple, and very, very easy to understand. And like this, a lot of price action coming here. This is a lot of buy, a lot of sell, a lot of buy, a lot of sell, a lot of buy, a lot of sell. There is possibility that there is some leftover funds here. And there is possibility that this is not even working because it is a demand zone. What do we have here? If you look at this area here, let me roll it. If you look at this area here, this particular hairs here, what do we have here? Look at it, extend to the left hand side. We have a rally up here which closed back under. We have another move trying to close above the close here, but it came back under. Then we have another touch again onto this point, which then reverses back to the downside. Even this particular candle couldn't quite get a close above it. So looking at this 1, 2, 3, 4 movements on this area alone is showing something. And what is it showing? It's showing resistance. It's showing resistance. Not to talk of when we look at this point. Here we have this candle closing above this very price line, and this price candle coming back down and closing above it. Likewise for the rest candle up onto this particular candle. And after the breakdown of this candle, we have some candles trying to touch the very line but couldn't quite touch it, but then they keep getting pulled back down. So what do you think is happening when you look at this area up onto this area before the breakout candle? This is definitely support and resistance. So this might be that it is not this demand that is actually making this price to react to the upside, but support and resistance. It is not only supply and demand that works in the market. Supply and demand is not the only strategy that works in the market. We have a lot of strategy. We have people trading with indicators, RSI, MACD, MFI, volumes, and many others. We have people who trade with patterns alone. People who draw patterns like this and a breakout and they want a retest of that. And we have people who trade some support and resistance. Definitely, this is a support. We have support here. We have resistance here. Then we have another resistance here. So once resistance is broken, it turns to support. So what we have here was support. Because this area is also a basing area, doesn't mean that it's a valid supply and demand zone. To me, it might be a zone when you look at a rally, then you have a base and you have a rally. But that is not what I look for. I may look for this to see where I want to see what I want to see. But that doesn't mean that any rally based rally, I'm taking out the base. No. I might even have a rally base drop and I will never take this on here. There are many trades I've left like that because I look at market structure. Market structure cannot be doing something like this. And because we have a drop from this point, I say because it's a huge drop, I have a supply zone there. When this low has not been validated, definitely I will never take this zone here. I am looking for demands. Once it goes below this resistance resistance turning to support area. The moment it comes below it, I'm looking for demand. Any points for this on this level, and now we have my stop below the invalidation. Then what will I expect? I will expect to get filled and then rally to the upside. That means I'm expecting this supply zone to break. That means it is a supply zone, yes, but then I'm not taking it. Why? Because my market structure is not telling me to take it. But if I have something like this, this is invalidation level, right? I have some zones, some demand zone around there. Then I have something like this, and I have it broken. Then whenever price returns to this supply zone, I'm taking it definitely, and I expect price to go lower than this because market structure is telling me to do so. So I trade supply and demand with market structure. So when I see a zone like this, Assuming it's not even any point of support and resistance, I will never take this zone, because this is a lot of price action. There are some zone that we have a lot of price action, but then indicator will still give me some signal that I will take. But then if I will take that, I will take that based on confirmation. I want to see willingness of price to reverse to the upside before I then take it. I will not just take it because it is a rally based rally or rally based drop or drop based rally. I will never take that zone like that. And that was why I explained this zone. There is a lot of price action. A lot of money has been traded at this particular area here. And if you look at the risk reward from these points as well, let me check the risk reward. You might want to have your stop below here. So let me check for the quick risk reward and see. As we can see, it just gave just like 1.5 hour. Here to here is 1 hour. Here to here is here to risk 1 hour. Then here to here is 1 hour. Here is 2 hours. So that's middle of this, right? So that's like 1.7 hour. And I will be hoping for 3 hours. So this is never a good setup for me. So it all depends on you. If you think this is okay for you to trade, fine. You can trade it, but trade it with confirmation. There is no, and then you might even use another strategy, like people use Fibonacci. You can take your Fibonacci and you can choose to find a point maybe the 50% range, or 60 or 78, and if there is confluence, we take the trade. So there is not just one strategy that works in the market. There are a lot of strategy. But as for this place, like I said this is not a valid zone. So when you say I'm giving you cruise either due to that particular zone, I never said I am taking that zone. I never said I will take that zone. So if I said no more than 5 candles at the base, and this particular area is more than 5 candles, that is a reason why I will not take it. I was just illustrating that if you choose to take it, and I was using this particular red candle, the last candle before the breakout of the base, as the entry. And I was looking at this, it didn't give quite much reaction before it broke. But looking at this point, the topmost point, then it gave a reaction here. But it is not because it might be a rally based rally, but because it is a support and resistance. So you should get that. You should get that. And I never said I will take this trade. I said this is not a trade I will take. This is not a valid zone to me. It may be valid to you. It's okay. It depends on what you see in the market, but to me that is not a valid zone. And so let me move on to the second question, where you said a candle making fake outs. Let me try and see. I don't know if there is some fake outs here. Like we have this last drop, then we have this drop below, and this seems to be the fake outs. We have a breakdown below of this on this particular candle, then it closed right inside. Yes, it is a fake out, and I don't quite get that question, but then let me read again. So tell me, sir, is it that range extension means nothing in supply and demand? What I mean by range extension is price us on the last drop candle, then produces fake outs upon fake outs. This wicks below, breaks the low of previous basic candle, but closes within it. Then another candle forms. Let me do this. Let me use this screenshot issue. So if this is what you mean, like we have a red candle like this, and then we have another red candle like this, and this, assuming this happens to be the last dropping candle on the drop, assuming we have wicks like that, then what you are trying to say is, assuming we have, okay, let me elongate this a bit. Okay, then assuming we have something like this, right? It opens here, closes here, right inside, but then the wick is a fake out of the last candle like this. That is an armor, right? Then we have another candle. Let me say a green candle now in this case. So assuming we have a green candle like this, opening here, closing like this, or like this even, then with wick to the downside, faking out this as well. This has been faked out. This was faked out by this was faked out by this. Then we then have like a final rally to the upside like this, right? Oh, sorry. Then we then have a final rally to the upside like this, right? If this is what you mean, that does this matter in supply and demand? All this faking out lows, faking out lows, faking out lows. To me, if there is a setup like this is an hammer. Sorry about this. This is an hammer, this particular candle. This is another hammer, this particular candle. And this is a bullish engulf, not minding the fact that this is also a green candle. It is also a bullish engulfing candle to this. And even better, assuming this candle were to be a red color like this. Assuming this candle were to be a red candle like this. Something like this. Or let me redraw this. Assume it is a red candle, opens here. Oh, sorry. Opens here, closes right inside of it, but then that's a wick triggering the lows of this. This faked out by this faked out by this. And then we have the final up candle, probably an engulfing candle, like this. If this is what you are saying, that does this lows mean anything to supply and demand? It doesn't mean anything. What it means is there is heavy bear presence at this point, trying to push price lower, and then there is heavy bull presence trying to get price back into the areas or the regions of the bears. I explained this in one of my videos. I think that is a price action video. Is it a price action video? I just explained one of them of my videos. So this shows bull presence. Yes, for the fact that we still have lower highs, lower highs, it means bears are still in control. But then it's showing heavy bull presence by closing back inside of it, causing a fake out, which is an SFP. And when SFP happens in the market, you expect price to rally to the upside. More better when it happens with an hammer like this. So pushing back above and closing above this previous low shows heavy bull presence coming into the market. But then bears were still in control by making the price to have higher lower highs. So when then you have an engulf here, or even if it is not an engulf, if you have a bit of consolidation to the right hand side, you have some price action to the right hand side, and then another heavy breakout. What does this show? This shows overwhelming demand from the bulls. The bulls were then able to overpower the bears. So these areas, you have a base. So if you have fakers like this, it doesn't really mean anything in supply and demand. It shows that bulls are trying to push back price, but then the bears are still in control. And what this shows is that the smaller the candle body sizes get, it shows lack of momentum from the bears. It shows the bears' power or their momentum is weakening. And once bears momentum are weakening, that is a signal for reversal in the market. Look at this candle, is big, this is big, this becomes small, this even becomes smaller with closing above the lows of the previous candle. This shows weak momentum from the bears and a signal to reverse. And then if you have straight bullish engulf not going lower than this low, even if it goes lower than this low, it can still be a very good zone, because in crypto is very crazy. Crypto is very crazy with wicks. But then you just have to tune it to what you want after several back testing on what works and what does not work. If a logo lower than this and it is an engulfing of this candle on a coin or on a pair, it may work perfectly, but on another it may not work perfectly. So it depends on what you trade. You just have to look back on the chart, look to the left hand side, see how price reacts to such areas. And if you have something like this, this is a good base when trading drop, base, rally. And even if this is not an engulfing candle, assuming then you have this red candle, then you have another red candle or green candle that is just an inside bar of this, and then the next candle is a breakout candle. This is an inside bar pattern because you have this side, this low, and this candle contained within it. It can be a red candle, it can be a green candle. But the fact that it is an inside bar, and then this candle broke out with a lot of volume, even if you're not looking at volume, but it broke out with a lot of momentum. That means you do not want to see a candle like this, a breakout candle like this. Then this candle breaks out like this, and then you have this kind of wick like this. Compare the body size to the wick size. Do you think bulls are actually winning this battle from this point to this point, or bears are winning this battle? Don't forget that this wick you see on the top shows bear pressures. So for the fact that bulls were able to push the price up to this point at the time, and bears were able to repel them and then close with this small candle size compared to the entire candle body or entire candle size, then it shows a lot of bear presence. Then do you think if price used to come down from this point to retest this base, do you think this base will hold? Definitely not. I will never take this zone. But if you have something like this, you have the breakout candle like this, as strong as this, with something like this, does this shows that the bulls are winning the battle or the bears are in control? This definitely shows the bulls are winning the battle. So if there choose to be a retest, even from this point to this basing area, either this area or this particular inside bar head, because sometimes I use the top of the inside bar. This is going to be my next video, so I'm just giving you an expo here. So I would definitely take this trade, but then I do not want a breakout like this to happen. I do not want a breakout like this to happen and an instant retest. Sometimes instant retest shows this whole move might be a fake out. We do not only have fake outs with wicks, we have fake outs when there is a breakout and the next candle body corrects 100% of the move. That can be a fake out, a fakey. When you have a breakout like this, then you have another candle coming like this. So I do not want an instant retest. What I will look for is another candle opening, probably with a wick, that won't matter. But then I want to see a candle making an higher high, an higher low, and closing as an higher high, an higher low. Even if it is a red candle will be like this, right? We close like this. But then I want to see a higher low and higher high. This gives me bullish. Oh, sorry about this. This gives me a bullish market structure. Are you getting it? Because this particular candle opening here, closing here, then we have a low. This is a low. Then we have this high, which this is a high. This is a high for this high. This is a low for this low. This is a low here. This particular low is this low. This particular high is this high. And what is this telling you? This is telling you a market structure. And once you have this, you expect price to come down, find support anywhere or demand, and then continue higher. So I want to see this setup. Once there is a breakout candle, I want to see a candle making higher high, either closing below it and causing a fake out. I don't care. But I want to see it making higher lows and higher high. And it closes like that. I do not want to see it coming straight back down. Sometimes it will work, come straight back down, and then go back up. Of course, a lot of things can work in the market, but then I want to take what I want to take based on my experience. You understand? I've been trading supply and demand for like 5 years now, and I know I've been wrong so many times, and I still learn. Quite what we learn every day, but then I want to take what I want to take. There are a lot of valid zones, valid zones that I wouldn't take because they do not meet what I want to see. So I want them to meet what I want to see for me to take it. I hope you understand this explanation. And if you do not understand, I hope in the next video I will talk about this bullish engulfing and inside bar. There is one other one, but I don't think I will talk about that for now. So I hope you find this particular video very useful to your question. And if I do not quite understand you, just beat me on Telegram so we can talk further. All right, Emeka, thank you.